Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Faraday Copper Corp. Before we introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with Faraday Copper, please click on the Meetings tab found in the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Paul Harbidge, President, CEO, and Director of Faraday Copper, which trades on OTCQX Best Market under the symbol CPPKF and also on the TSX under the symbol FDY. Welcome, Paul.
Thank you, Eric. And hello, everyone. Thank you for joining me to hear about Faraday Copper, a company that is developing a US domestic sources of copper supply. I'll firstly draw your attention to our cautionary statement, as we will be talking about forward-looking information during this presentation. So Faraday Copper, we have two assets. Our flagship project is Copper Creek in Arizona, and it's one of the largest undeveloped copper projects in North America, with over 3.9 billion pounds of contained copper in the M&I category, which has the potential for a mine life of more than 30 years. Our second project is Contact Copper in northern Nevada. That's a straightforward copper oxide deposit that has the potential to be exploited by open pit and a heap leach operation. We are well funded to deliver on our key milestones going into 2023, and we're supported by three key strategic shareholders in the Lundin family, Murray Edwards, and Pierre Lassonde. Some of the up-and-coming catalysts: we've recently listed on the TSX main board, having upgraded from the CSE, and that certainly improved our liquidity and also reaffirms our commitment to strong governance, as well as really bringing a senior company mentality to the junior world. We've got a PEA coming out on Copper Creek, and that's going to be in early Q2 2023, and I'll give you details of what to expect in that. And we've recently started a second phase of drilling, a 10,000 meter program at Copper Creek, and so we'll be getting results as we progress into the new year in Q1. And then on Contact Copper, we've been doing more earlier stage work, rebuilding the geological model, flying geophysics, soil sampling, generating new targets. So why copper and why the US? When you look at the US or you look globally at all of the copper development projects, you filter it down to the US, and really there's very few projects, just 11 that are in the hands of smaller companies. And when you look at this graph, you can see that in terms of size and grade, then we stack up really well in terms of that resource. And then more importantly, why we're a compelling investment opportunity in the fact that we're at the other end of the graph in terms of our valuation. And so as we de-risk the projects through our technical work, as well as start to unlock further value through exploration, making new discoveries, then we'll really unlock the inherent value in this project and moves ourselves up the curve to be of a higher value. And that's really the investment opportunity here. And for us, it's about bringing senior company expertise to the junior world. We've got a full management team that have all worked for some of the largest companies in the world, both in base metals and in gold. And we're supported by a very strong board who are providing their expertise and guidance as we move the projects up the value curve. In terms of our corporate structure, you can see here that we've got $13.5 million in cash, which I said earlier would see us through the main milestones going into 2023. We've got 123 million shares outstanding. And we've got a good spread of, our strategic shareholders, I mentioned, insiders, which includes management, together with prior management, and then a number of institutions who are also shareholders in our company. We've got analyst coverage by PI Financial. And so turning to Copper Creek, our flagship property in Arizona, we're right in the heart of the Southwest US Copper Belt. Great location, great address, and surrounded by some of the largest copper companies in the world, whether that's Freeport, Rio Tinto, BHP. We are in the San Pedro Valley. Importantly, this is an area where there's no aquifer protection. The water is deemed unusable for agriculture, therefore there's no agriculture, and it's actually prioritized for industrial use. We've got great infrastructure in terms of roads, an active rail system that comes through San Manuel and links up to Mexico, where a lot of concentrate is shipped out. Also, we're not in any residential footprint. We're 75 sort of miles northeast of Tucson. We are at the confluence of two main copper trends, the one that runs east-northeast through Freeport's Morenci Safford district, through the old San Manuel mine that was operated by BHP. And then there's the northwest trend that runs up from Resolution, Sarco's Ray Mine, down to the Johnson camp. And so also excellent for power, skilled workforce in Arizona, and obviously easily accessible. We don't have any challenges with altitude, for instance. In terms of our land package, we've got a combination of private patented land, private surface, state land, and federal land. I'll draw your attention to this pink block of land to the southwest of the land holding, and we also own 100% of the 41 square kilometers. So this pink block of land is important. It's private land. It was a ranch that was bought several years ago. And we can get all of the surface infrastructure for a mine on here, including the mill, stockpile, and tailings dam. And we're looking at a dry stack tailings, recognizing that more conventional tailings is not something that's likely to get permitted going forward around the world. And also in Arizona, being able to recycle that water will be a key component. 90% of our open pit resource lies on the purple private patented land, and our underground resource underlies the federal land. Turning to the geology, this is a porphyry deposit. It's got two styles of mineralization, which are hosted by the yellow colored rock here, which is called the Copper Creek granodiorite. And then we've got these secondary porphyry intrusions that intrude that Copper Creek granodiorite. And then we've got a vein mineralization associated with those porphyries and copper mineralization. And then we've also got these breccia pipes that are now exposed at surface. The breccia pipes can be high grade, up to 1% to 2% copper. And they're what constitute the open pit resource. And then the vein mineralization associated with the porphyries at depth is what constitutes the underground resource. Metallurgically speaking, or mineralogically speaking, it's simple. We've got an outer halo of pyrite mineralization that grades into chalcopyrite and bornite, and they're the predominant copper minerals. So we built a full geological model that has been used to constrain the mineral resource. And additionally, for the mineral resource, we've combined the metallurgical work, which I'll touch on shortly, and the full geotechnical study. So when all of this information, all this empirical information is put together, we have a total resource of over 400 million tons grading 0.5% copper, which is just over 4 billion pounds of copper. 83% of that resource is in the measured and indicated category, and that's where we get the sort of almost 4 billion pounds of copper in the M&I category. And you'll see here on the left-hand side the metallurgy. 92% copper recovery. This is a sulfide only project, really very little oxide. So 92% from the sulfide, good grades in the concentrate, greater than 32%. And it's a very clean concentrate. There's no meaningful deleterious elements, nothing that's above penalty grade in a concentrate, for example, arsenic. And also work that we've done on the waste rock has shown a low potential for acid generation. And so for the first time in this project, we've got a combined open pit and underground resource. And the strip ratio on the open pit is 1.3 to 1. And so now the graphical representation of that resource here, the upper image shows the open pits. And you can see the red colors, which are the higher grades, greater than 1% copper. You can see those related to the breccia pipes, so those high grade cores. And then they're surrounded by this lower grade envelope of copper mineralization. And you can see these pit outlines, and you can see that they're actually limited on data. And so the opportunity to expand that open pit with further drilling. And I'll touch on that with our 10,000 meter program that we're drilling right now. And then the bottom image here is the footprint of the underground. And again, you can see we've got a large footprint over a kilometer in length, 500 meters, and it's got a height of over 500 meters as well. And within that underground footprint as well, we've got these higher grade cores within there that as we go through the PEA, we'll look to optimize and schedule to really, bring the value forward. And so what we're envisaging is an initial open pit followed by a bulk underground mine. And so the base case for the PEA is going to be a 30,000 ton per day operation. Sort of we're looking at a 14-year mine life, firstly from the open pit, and then transitioning into a bulk underground mine that's got a further 20 years of mine life. And so altogether over 30 years of life, producing 3 billion pounds of payable copper. And so now that we've got the resource, the pits and the open pit, we're now busy bolting together all of the empirical data. So bringing together the core foundation being the geology, then adding on the geotechnical, the metallurgy with that mine design and the economics to deliver that PEA. And so we've already done the trade-off studies as part of an RPEEE or reasonable prospects of economic extraction study in conjunction with the resource. And so now with that base case, we're on schedule to deliver that at the beginning of Q2 2023. Now, we did a 6,000 meter phase 1 drill program earlier this year. We didn't have the results when we did the mineral resource estimate in July. And so as part of the PEA, we'll be updating the mineral resource estimate, incorporating not only the 6,000 meters of drilling, but also additional sampling of core that hadn't been sampled in the past. And what's been really encouraging is that the results that we got back from the phase 1 drilling have actually been better than the blocks within the current resource. And so firstly, when we look at the open pit, this is the Mammoth open pit, and you can see the pit, and that's what the resources were assigned within or cut to. And so you can see here, we've got 35 meters at over 2% copper, and we've got high grades extending outside of the limits of that pit and therefore outside the limits of what was assigned to the resource. And additionally, we've got more grade that's occurring that was previously demarcated as waste. So the ability to further increase the metal content of the open pit, expand the open pit, and further reduce the strip ratio as we move forward. And then similarly on the underground, an exciting drill result from hole 7, where again we were getting high grades that are better than the blocks within the resource. You can see these yellow blocks here sort of running the 0.2 to 0.4, and we're getting grades above 1% copper. And the highest grade, the 19 meters at 4% copper, is actually occurring below the shape that was used to cut the underground resources. And so that shape there, that's where the underground resources are assigned. As I say, these high grades are outside of that. So again, the opportunity to further expand and better delineate the high grades from underground as we move forward. We started a 10,000 meter drill program in October, and that's got 3 aims. So one is to further expand the open pit mineral resource, and where you saw those images earlier where the pits are limited on data. Better delineation of those high grades underground. Hole 7 was really exciting for us and pointed to the ability to further expand that and enhance the grade. We'll also be using that drilling to do further metallurgical test work, which will be incorporated post PEA. We've got some samples already in the lab that expect results in early Q1, which will be fed in as part of the PEA. We're also busy installing piezometers, which will form the basis for geohydrological modeling and steps towards permitting down the line. And then finally, we're also starting testing on new targets outside of the resource. And I'm going to touch on that on the next slide. And being an explorer by experience, that's what really excites me about this project, is the exploration upside. And so recently we completed a detailed generative study. We incorporated all of the data layers. There's numerous layers of geophysics, geology, geochemistry. We've also developed a structural model as well, which helps better constrain and understand the distribution of the breccias. And there are over 400 breccias have been mapped at surface. 34 have had a drill hole or more, and only 14 are in the resource. So there's been a very good hit rate from drilling breccias and those that have made it into the resource. A number of others haven't had enough drilling to warrant their ability to be incorporated into that resource. So, we've got many more hundreds of breccias outside of the resource footprint to test. And with the structural framework now, we can see that they are bounded by what normal faults, and they've caused this block faulting, a bit like an egg box feature. So where blocks have been uplifted, then the breccias have been exposed, and where the blocks have been down faulted, they're not exposed. And so our priority areas outside of the resource are the rum and gin area. And we've just had a rig that's being mobilized up to there, and we'll be drilling the first holes in a new exciting area. And then we've obviously got the targets in and around the resource looking at that expansion. And then this western belt of breccias here has never had any follow-up drilling at all. So it's really a greenfields target. So we've now established a dedicated exploration team who are out there mapping, sampling, and delineating areas for drilling. So, from a district perspective, really exciting and really a high probability of making new discoveries. And so really when you start to look ahead with a crystal ball, then, delivering the PEA will be an anchor for investors to come back to, and it would really demonstrate the economics and economic viability of a project here at Copper Creek. And then with new drilling and the ability to make new discoveries, that will just further unlock value from this exciting project in Arizona. Now, our second project, Contact Copper, in northern Nevada. It's just off the I-93, which connects Nevada with Idaho. It's a copper oxide project. It's 200 million tons at just over 0.2% copper. It's all leachable, 78% leachable, and so it's an open pit potential, 10-year life of mine, 50 million ounces of copper production. And there's a number of exploration upside targets as well. We've recently remapped or relogged all the core, built a geological model. We've been field mapping. We've completed an airborne geophysical survey, just completing a full soil sampling program over the entire project. And so looking at opportunities to expand not only the resource, but a number of very interesting targets, whether it be New York or Copper Ridge, where there's a 28 rock chip samples, all grade above 1% copper, and the highest grade being 12%. And there's been no drill holes. So we're busy, putting all those data layers together to advance the project. From an ESG standpoint, as I mentioned earlier, we're bringing that senior company mentality to the junior world, and particularly now upgrading to the TSX. We've got all of our policies in place. They're all accessible on our website. Particularly at Copper Creek, we've started all of our environmental work and monitoring. We're doing water monitoring with installed flow meters and all of the drainage. I mentioned about piezometers to do the geohydrological modeling. We've engaged with the Army Corps of Engineers. We're also engaged with the BLM in terms of developing a pathway to permitting. And then also, obviously, how does a mining company lose its social license? And it's generally down to technical failures. When we see a tailings dam burst in Brazil and destroying the environment, then, really bringing home for me that technical excellence and making sure that we've got empirical data to make those informed decisions from, the foundational work of the geological model to the geotech to the metallurgy to really feed that into demonstrating the economic viability. And we've also started our community engagement and having open houses with our local communities and reaching out to the native tribes in Arizona. And so in terms of our project timeline, it's about delivering on what we say, when we will say, when we do. And so, as you can see here, we've delivered on what we said we would, whether that's reviewing the initial data, doing the phase 1 drilling, the geological model and the resource estimate for Arizona. And now we're busy with all of that technical work to deliver the PEA in Q2 next year. And then we've just gone through what we're doing with Contact Copper with the aim of a technical update in 2024. And so in summary, with the scarcity of development-ready copper projects, particularly in the US, we feel that we're well positioned with this large undeveloped mineral resource, significant exploration upside, and really, undervalued, that as we deliver on these key milestones, will really unlock the value of Faraday Copper and be able to deliver development projects in the US as we see the demand for copper increasing, whether it be, for the clean energy transition and the development of EVs and green sources of energy and copper. And so with that, I'll thank you for listening, and I will now take questions. So the first question is, isn't the grade too low for the underground? What really unlocks the value at Copper Creek is this initial open pit. And with that open pit, we can repay the initial capital in 4 years, and then ongoing cash flow from the 14-year life of mine from the open pit really then gets invested back into the underground, and that's where the bulk of the metal is. And our grade in the resource is fully diluted, recognizing that it is going to be extracted by a bulk operation. And as an analogy, it's got similarities to the grade and the development plan as the Red Chris mine in northern BC, which is a jointly owned by Newcrest and Imperial Metals. Next question, Who explored on the property before you acquired it? So this has a long history of exploration and small-scale copper extraction going back to the 1914s or early 1900s. There was some small-scale underground mining, and one of the breccias was rubberized to do an in-situ leach project. About 300,000 tons was mined. But previously, Red Hawk Copper worked on the project for a number of years, and before that, AMT going back to 1995. And so altogether, there's been about 200,000 meters of core drilled on the project, about $80 million spent on it. 95% of all the core ever drilled on the project is located in our warehouse in San Manuel and is all boxed and is all usable. There was a question on our drilling of the 10,000 meters, and so just to reiterate, that's got three main aims. It's about looking to expand the open pit resource, better delineation of the high grades underground, and to test new targets outside of the resource to make new discoveries. And so with that, there are no more questions, and I would like to thank you for attending and listening to the update on Faraday Copper. Should you want further information, then please look at our website, faradaycopper.com, or contact us and we can arrange meetings. So thank you very much.